So thank you, ladies and gentlemen. I too will join Nev in being very proud to stand in front of you. Excuse the limp. Take wild horses or a severe accident to try and keep me away. I've had to say I'm pretty excited about Fortescue. It's, my daughter Sophia showed all the early markings of having a really great career. She began examining rocks and stones when she was small. She had a complete collection of the geological table and understood every mineralogy, even the chemical nature of the rocks which littered her bedroom. And then she went off into psychology and acting. So, once again, I'm a lousy judge, but I happen to delight in her delight of the Pilbara, of the ancient nature of that earth, of the fact that we have such a huge endowment. We have some 80% of the tenements available held in Fortescue, with the other 20% shared by others. And that's really producing dividends. We're throwing off 165 million tonnes plus change to give that exceptional performance we spoke about earlier, where I think in the last half year we paid out about $70 million in dividends Australian. Then we, very following quarter, repaid nearly $400 million US in debt and built our cash at bank from 2.4 to 2.6 billion, and then straight away, as you've seen, bid for $750 million US at a discount on the US capital markets last night. So, I consider we've really got that dividend, debt repayment, cash flow balance really, really well calculated. It seems like it's a decent amount of capital which has gone out in dividends, but it's so fractional compared to the amount of capital we've accumulated and we've used to repay. And look, honestly, 2.6 billion US dollars sitting on your balance sheet, beginning to make us look like having a lazy balance sheet. So it's a very, very strong company. But back to Sophia. Very recently, we drilled 135 metres surface down of 63%, a new very large ore body. It was in the same vicinity, which makes it really exciting, of where we'd previously drilled a number of holes in a new ore body which don't even make up our current resources, where we had 200 metres of 62% iron. And so you're looking at a geological profile in the Pilbara which makes me really happy as an explorer. Sure, I enjoy the occasional sword fight with US and European investment bankers, but nothing gives me more pleasure than getting out in the field with our exploration team, reminding myself of that never ever give up culture, that do what you say you're going to do integrity, which comes out of our exploration team, which now permeates right across our company. And when they start kicking over results with the scant capital we allow them, with our iron ore price where it is, then I can only feel that the future really is best in front of us. We founded the company effectively in 2003. 5 years later, we'd raised billions of dollars. We'd kept control of the company in Australian hands. That hasn't happened before in a multi-billion-dollar company. And we commenced production at around 40 million tonnes a year. Now, a few years later, we've nearly exported up to 600 million tonnes of iron ore, on our way to 1 billion tonnes. That best address in iron ore, which I spoke of with my daughter's predilection for geology and my love for the Pilbara, and the results which we're seeing, where we're mining at the rate of 165 million tonnes, yet we're adding to the inventory 750 million tonnes a year. That's making for a really strong company. Our competitors are out there with these highfalutin expansion plans, but struggling to find the iron ore, having to develop new mines out of effectively working capital because they don't want to admit in an iron ore price such as we've had that they're spending truckloads of capital on new mines just to hold where they are. Fortescue doesn't have that challenge. We've got great iron ore, we've got the We've got the best address. And ladies and gentlemen, it's a simple company. We're here in the Pilbara, we're here in Western Australia, we happen to love that. It's a discipline which we've had, perhaps not very entrepreneurial. Many may accuse us, but it's a discipline which has rewarded us, because still, if you speak to every major company in the world in the resources sector, where would you like to be most? If you're not in the Pilbara, if you're not in export iron ore, they say we'd like to be there. That's where we'd like to diversify into. And that's where we are. And so we don't carry. You know, there's a senior stockbroking company who put out, if you take all the all-in costs of your company, you're perhaps the lowest cost producer in the world. And that is to say, we're not carrying that heavy working capital of $7 or $8 a tonne, we're carrying less than $2. We're not subsidising other very large acquisitions. We haven't barbecued tens of billions of dollars on overseas acquisitions, which we now have to carry and prop up with our iron ore subsidiary, which drives the earnings of the other three majors in the iron ore industry who call themselves massively diversified global companies. Well, actually, let's just have a look at your earnings. You're like Fortescue. You're an iron ore company because your great and global diversification extracts from your net earnings to shareholders. You actually are better off just being a Fortescue, being disciplined and staying where your knitting is brightest. So I feel that, if you like, the lack of entrepreneurialism, which drives the simplicity, which drives the discipline, which drives the integrity of doing what you say you're going to do, which drives that culture of never ever giving up, that courage I spoke of with the senior management team I needn't go into, that inculcates the heart of every Fortescue person. It's who we are. That's the uniqueness of the culture. Thank you. So if I could just maybe take a moment, there's a couple of internal, external propaganda departments which really don't want this explained. But I feel that my wife Nicola and I have some integrity to explain it, because what you have in, say, let's forget the iron ore industry for a moment, let's talk about the beef industry. That's got to be relevant, surely. Let's talk about the beef industry now. Most of us who walk down those shopping aisles are watching our pennies and see beef at a really good price. We're going to load up, we're going to look forward to those steaks that evening, medium rare, on the bone, fantastic. But if those steak prices start to rise, we're going to walk past that steak and we're going to buy a bit of turkey or chicken or lamb or whatever's more competitive, because there's heaps of replacements for our beef. I've got the manager of our own property here, Nicholas, who's sharing with the great women and men of Minderoo, Felicity Gooding and Aaron Hood, the responsibility of running not only the major shareholder, but quite a substantial agricultural operation. And Nicola can tell you, cattle prices go up and down like a yo-yo. Beef prices go up and down like a yo-yo because it's highly elastic, it's sensitive to price. It can be replaced like that. Now let's talk, if we could, about iron ore. Thanks. That's that elasticity of demand. If that price goes down, sticking to beef for a moment, if that price goes down, then the demand goes up. It becomes clear there's a buffer. If you strongly increase your production, which of course the beef industry tends to do, then your price will come down, but you're rewarded by a much greater market, because you're starting to outcompete all your competitive meat products. We don't have that in iron ore. Let's quickly now switch from beef to iron ore. Thanks, mate. You've got this inelastic demand curve. There is no substitute for iron ore. You're going to build your houses, you're going to build your bridges. Every 8,000 tonnes we load per hour, you're going to build your Sydney Harbour bridges or equivalent. You're going to build your 60 cities, which you need to almost yearly. You're going to build out 1.5 Australias almost yearly with that iron ore, because there is no replacement. You can't go and build houses out of aluminium, manganese, nickel. It's going to be more expensive again. You need that fantastic, irreplaceable product, iron ore. But it stands on its own. It's there. And if you do, as the senior fund managers of the world, the biggest shareholders across all four of the majors in the iron ore industry have said to us, if you manage your markets, you'll do really well. But if you're dictated by volume, if your bonus packages, which the ASA Shareholders Association must have a picnic with, if your bonus packages are bent on volume and not on shareholder return, then you're going to crush your own market. And what's happened, of course, is that as people have pushed up, and I've heard so many times, oh, Fortescue's done it most. Yes, of course. We did it as the iron ore price went from $40 to $180. And when it came down to $140, we stopped. Nev Power was predicting $100 to $110 is the natural price if everyone in the industry stays sensible. He was correct. His assumption, though, wasn't. The others didn't stay sensible. As that price plummeted, you started to hear this language, which if you heard it in any other industry, would have really raised everyone's eye. You'd have had inquiries into that. You'd have asked what's going on. Why would a company, a huge multinational company, say, you know, I'm looking forward to seeing my friendly competitors out of business? Or even as ridiculous, I will oversupply now and I'll oversupply in the medium term. What's the point of those statements? Did they know they were going to force this price down? They knew iron ore has an inelastic demand curve. They knew if you expand into an inelastic demand curve and the demand isn't there, the customers are just going to reward you by slashing your price. They're going to increase your volume marginally, but they'll take you to where Nev foreshadowed, not to a natural market, but to the marginal cost of production. So in answer to my colleague's question, fellow shareholder, the iron ore price could go down to just a few dollars above where Vale sits. We'll be all right, ladies and gentlemen. We'll still have a respectable company. We're driving down to all-in cost, perhaps the lowest in the world, and C1, really competitive, 15 and falling. That's from the ground into the ship. All-in costs, everything included. All the money it takes before you shareholders see a dividend. We're very competitive. But is it ridiculous behaviour? It certainly is. It shouldn't have happened, and I still argue that, yes, the ASA Shareholders Association said, look, management's done a spectacular job controlling the things they could, but we also did everything we could, thanks mate, to point out that this is not the time for grandiose statements. I'm sorry you can't read all this on the board, but it basically uses those quotes which were made by our competitors, which was nothing more than chest-beating statements who obviously weren't aware of the sophistication of the futures industry which had recently developed in China and around the world. And they took those remarks that we're going to oversupply in the medium term, we're going to oversupply now. Now, who in their right mind ever says we're going to oversupply our own industry to jam our own price down? I've never heard it before, nor have you. But now we've got captains of industry, which media are going to say, well, they must be right because they're big. I've never understood that. Media, though, however, has given a great deal of accolade and applause to those statements. They've defended the call for an inquiry. When we dropped tens of billions of dollars out of the Australian economy for no net benefit, when we slashed Nev Power's observation that the iron ore price, all things being equal, should settle between $110 odd, he didn't take into account that behaviour. And that behaviour is what drove it down, because the futures market can trade up to 10 times the natural production of the world, and it can do it in a month. And that's annual production. So you start saying that you're going to overproduce, big balance sheets are going to believe you, and they're going to take that futures price straight through the floor. And of course, the natural price follows. Thank you. So this is BlackRock, largest investor in the world, putting it very neatly. Evie Hambro, very smart operator, sending this message out to all of us. Commodity prices are telling you that the market doesn't need the volumes. So why keep adding new volumes to the market? That's what's driven the price down. Nev Power called a halt. We have fabulous deposits we could develop. We've had exploration results which other companies mouthwater in Australia. Our bees need to China. A great place to develop projects. We have got latent capacity in our railway lines and our ports. We could switch it on tomorrow. But we didn't do it. Nev Power and his team, Steve Pearson, Peter Merz, they wear the badge of shareholder value on their chest. Not, I want to be the largest iron ore producer, I want to be the second largest, or whatever it takes. What measuring competition am I in this time? You're not. Only shareholder value should have driven your decisions. But it didn't. And that iron ore price went from 140 to the 40s. And I say, ladies and gentlemen, it could well get darker before it gets brighter in the iron ore industry, the iron ore price. We're taking our costs to the bottom of the world cycle for very good reason. We want to produce quarters like we've just had, where we repay debt and add to our cash furiously at rock bottom iron ore prices because of the great work of our team. Thank you. So look, China, we've done a heap of work in China. We've kept a very close eye on India. I've been visiting India for now 30 years. Certainly on a slavery context, I've been very tuned into how India is developing, but in an economic context, that dawn is becoming brighter. That economic growth is happening. 8% year on year, despite the bureaucracy, you can talk about the corruption, the rest of it. There is a momentum developing in India which I haven't seen in any country since that period between 1999 and 2003 when we launched Fortescue. And I've heard India's always got great potential, and that's all it will ever have. But I've heard that said about China too. Now, we'll maintain our exposure to India in an indirect route because we've got champions like Chairman Chow who's bringing his own costs down. So as India switches on its steel production demand, which it will, there's a huge supplier in China just over the water willing to ship as much as they need. But we've got very strong indirect exposure because the 10 largest, most credible, most blue chip steel producers in China and some say in the world are all your customers based in China. And they will ship to India, but we will also grow our exposure to India as well. Thank you. And we do it, of course, through the Senior Business Leaders Forum, through relationships with captains of industry across China and the people who run China. Now, the part which I know excites my family mostly, and which, employee after employee, teammate after teammate, brother and sister of Fortescue have said to me, this is the part which really sets this company apart, where it, with its heart, with its capital, with its dividends, drives some really fantastic work in the community. Thanks. So, we measure what needs to be done around the world and in our own backyard. And we go after it with leadership, very hard working with capital. We make sure that we drive for not handouts, ladies and gentlemen, but like those 1,000-odd employees we have in Fortescue and the many thousands of others we've helped, with a hand up. to really drive that self-sustainability. And we look around the fabric of our own society and say Western Australia is not a mining economy alone. It is a smart economy, and we will do, as a company and as a shareholder, everything we can to drive that intellect, that power into our own state, into our own country. Thank you. So, well over $200 million and rising has gone into philanthropic endeavours in the most one and a half decades. Nicola, chairperson of the Minderoo Foundation, ably supported by Felicity Gooding, Chief Operating Officer, Chief Investment Officer, Aaron Hood, drives this for us. And they have the wood of accountability on their knees. Thank you. Globally, we've started the largest organisation ever put together to counter modern day slavery, which is growing, and growing quickly. But I'm joined here by others in this room who have equal passion, but have witnessed unprecedented capital come into this fight. Historically, large amounts of capital come into this fight from your Fortescue funded organisation, Walk Free. We pulled together. People said it was completely impossible. There's a book written by the Grand Ayatollah of Iraq and Iran, Modarresi, and he talks about the zealousness and the energy and the courage and willingness to fail that went into pulling together the religious leaders of the world, where the Grand Ayatollah met a pope for the first time in history, where Sunni and Shia, they're having a little argument together in the Middle East, where Sunni and Shia leaders met and published their first agreement ever, where Christianity, Judaism and Islam published their first agreement ever, where even the Anglican faith and the Catholic faith published their first agreement since prior to the Reformation. And that agreement was for their believers to do everything in their power to eliminate slavery from the world. And we do this through measuring. We win friends and we win enemies in sovereignties around the world because we publish without fear or favour the Global Slavery Index. It ranks every country and puts it out there. Our next will be unprecedented in its accuracy, in its surveys around the world. There's some 50 surveys which are being done across the world in conjunction with the International Labour Organization, and we'll publish a number next year that will measure again each country's slavery, and some will writhe in pain and some will celebrate, but all sovereign leaders will know that slavery is now under the spotlight, it is being professionally measured, and there's no foreign trade, multi-billion-dollar loans, political favours which is going to stop the accuracy of those results. It's all funded by the dividends and the support of Fortescue. Some 3,000 people have been liberated, and that is the trickle before the flood. Generation One is a great love of my family's and our hearts and all of us at Fortescue. It's to drive the disparity which exists between First Australians and all others out of business through opportunity, through education, through training, through self-sustainability. We've given a complete blueprint at the Prime Minister's and Cabinet's request of how to completely eliminate the disparity. Cabinet has voted to adopt 95% of that report. Now we're asking the new Cabinet to make that happen. Thank you. Some 5,000 jobs have been recently filled through the government driving that policy, and prior to that, some 24,000 jobs. This is more than has ever happened in history, ladies and gentlemen. People who are long-term unemployed may have believed they could never be employed, but were met with education, were met with training where they were. We didn't just go to university-educated Indigenous people and swap them around companies, because they're in the minority. The majority we deal with have been neglected by the education system, needed often to sharpen up or to learn to read and write, to get their driver's license, to get on the road, to be able to sustain their own families. And we keep this attitude up, and our children will not inherit, our Australian children will not inherit a disparity in our country. The Smart State, Nick and I have committed some $65 million to the 5 universities of Australia. Over some 1/3 of that approximately is in their bank. It is being paid each year and driving some of the smartest people in the world to study, to train and to mentor others right here in Western Australia. Thank you. Thrive by 5 is something which I think when we lend our minds to it, think of what is the most influential part of any human being's life. When does the brain grow? By some 300%. From birth to the age of 5. After that, how much does it grow? Not by 300, 200, 100, but by 10%. So the time to really impact a child is in that critical first 5 years of life. Indigenous, non-Indigenous communities all across Australia are being helped through the Minderoo Foundation and our joint venture with the federal government, where they're putting up $20 million to back these very, very appropriate programs. Arts and culture, some $20 million has been gifted into our communities to build up the cultural base of Western Australia, to ensure that we all have an appreciation of the greater and finer things in life, the things we can all believe in beyond our daily bread, and build the structure, the strength of the fabric of our communities. And it is community. Some 230 community organisations have been sponsored, some $12 million just to small community organisations, education, anti-trafficking, medical research, mentoring women and children have all won out of the support of Fortescue and the dividends of Fortescue. Thank you. So if I could just leave you with that, ladies and gentlemen, your company's out there. It is being a super competitive company. It's driving its costs down. It's driving its morale and the strength of the integrity of its workforce up. It's competing with the majors on any level. And at the same time, it makes a massive direct and indirect contribution to the strength of our very community to which we will leave our children. Thank you very much.